All right, so welcome to the webinar. My name is Walter Peters, and we're here at the Naked Forex webinar. Those of you who have been following my trades know that I prefer to trade without indicators. I don't have anything against indicators. I just found that for most traders, trading without indicators has several advantages, one of which is to basically stick with a system, which is probably the primary advantage. And beyond that, it allows us to interpret price action. Not always, but a lot of the time, interpret price action so that we know what's going to happen long before indicators turn over and tell us, what's likely to happen. So for me, it's really the way to go. I wrote a book about it called Naked Forex, and you can email me if you have any questions or you want some of the ebooks that we've talked about here. I try and give people ebooks when available for some of the systems that we talk about. So everyone can hear me okay now, yes? And you can see my screen. Okay, great. All right. So the trade that I have on now, and those of you in the daily trader know about this, but basically I've been watching this trend line here on the EuroCAD daily chart, which is what I have on my chart here. And you can see that since August of last year, the market's basically come up and bounced off this trend line several times. Once here, it just hugged it, finally moved away, came back down, came close here in November, but it really bounced off hard with a little belt right here in December. And then it went up, came back down, and made another really close call. And then finally, it's hit it just yesterday, in fact, and it closed below it. And to me, that was a very important move. So this is what I'm looking for to happen on this pair. First of all, I've got my stop loss at 1.3190. And again, this is something that's just happened today, right? My target in general, my number one major target is 2750, which is essentially where it bounced right here with this little belt candle down here. That's essentially what I'm looking for. You can see that the market bounced there, it bounced there, it held there, then broke through, came back up, found support, and moved up. So this 1.2750 level, I actually have it drawn as 1.2747 on my chart. So a 1.2750 is just a few pips higher to make sure that if it does get down there, it cashes me out. I actually wouldn't have a problem taking profit at 127.60. But here's what may unfold. If you didn't see this setup, and again, the idea of the setup is that when the market trades off of trend lines, well, we can actually do a whole entire webinar on this specific system because there's a lot of intricacies. But since today is about live trades, and this is the one live trade that I've got on, I wanted to talk about this one. The basic idea is that as the market bounces off a trend line, later on what will happen is it will eventually just break through that trend line. And then where is it going to go? Well, we basically have two really important spots on the chart. The first is actually almost there right now, which is 1.30, okay? Oh, and by the way, the trend line was at 1.31 yesterday when it broke through. It was right around 1.31 even. So it's going to probably fall the 100 pips and get down to this level. Now, notice that we have some tops here. There's one there, there's one there, and there's one there. The astute naked traders here will notice that this double top right here was also punctuated by a kangaroo tail, right? So here's what I'm thinking. What's probably going to happen when it gets down to 1.30, and it's only 33 pips away from that, it's probably going to pause there. It's probably going to hold. And it may even come back up and tag the underside of the trend line, which often happens when you see this thing happening. It will often happen that the market, when it breaks through a trend line, comes back up and kisses it again and then keeps going. So even if, let's say that you're interested in this setup and you really want to, look for a nice trade here, if it were me, I would wait, because it's already gone to 70 pips. I would wait and see if it'll come back up and maybe next week tag our underside of the trend line. Then we get an opportunity to sell it there and take profit down here. So I would expect 1.30 to hold. At the very least, the market's likely to pause here and maybe close here today, and maybe tomorrow it has a little bullish candle, and then maybe next week it falls through or something like that. But at the very least, it will pause here, I'm guessing. And at the most, it may come back up and then tag the trend line, bounce off of it, and then go lower. And finally get down here to 127.50. Minaj says, can you please precisely explain how you draw your trend line? Sure. Claudia says 130 may be momentary support, and maybe I'm opposed to selling this. Yeah, exactly. Claudia, I am totally with you on that one. I think 1.30 is a pretty critical area, just given the fact that we see it reversed here, it reversed there, it reversed there, it paused here, it paused there with this big bearish candle and then finally broke through. So at the very least, I would expect a pause, and at the most, I would expect a retrace and a move back up to 1.31, or 31.30, right around there. I've got my stop at 31.90, so it's okay to me that it's basically on the other side of this support level here, this blue line. That's where my stop is. So I wouldn't be averse to taking a little bit of profit down here, but it's really only going to be about 70 pips of profit. So ideally, I'm going to wait and see if price action suggests that it will in fact break 1.30, and then 27.50 is definitely in the cards. Okay. If you don't know what a kangaroo tail is, you can email me here, and I will send you the book on it. Okay. And that goes for anyone. If I say something like kangaroo tail, big shadow, whatever, and you don't even know, like you're just saying, whoa, what's going on? Like this is a big shadow right here. Now this isn't really an ideal big shadow, but it did give us a hint that the market might fall, and it did. It's fallen the last couple days after this big shadow. I wouldn't trade this just based on this big shadow, but it is a big shadow. If you don't know what that is, just email me, Paul D, and I will send you a book. Okay? No worries, Mark. No worries. It looks like Paul D and Mark are going to email me for the book. Okay, so that's basically where I'm at here. We've got a new low today. We're about 18 pips away from our 1.30 level. So it'll be really interesting to see what this daily candle looks like. That is really the number one trade for me, and the one that I've been watching. Are there any other trades that people are in or thinking of taking and want to take a look at that? Because that's really what this webinar is all about. So for me, the Euro CAD is the A1 number one setup, and that's the one that I'm in and I'm trading right now. But I want to know about your trades, and maybe we can look at them from a naked perspective. So, okay, Pan on Fire, which is, by the way, probably the best name out there today, Pan. It says the Euro Aussie. Okay, let's check it out. Okay. I'm going to get rid of all these comments because they're really distracting, and that's from another webinar. But the Euro Aussie, I would say, has a really good shot at getting down to 1.2180. So that's 60 pips away. I don't really know if it's going to bounce off there. It probably will hold. At least, again, it's probably going to at least pause there. I don't have any reason to sell this pair right now, but if I were in a sell trade on this pair, I would definitely hold out for 1.2180, which is, again, another 66 pips lower than where it is right now. Who else? Hopefully that makes sense, Pan. You see why I'm saying this? Because it came down to 2360. It held. It paused here with this close, and then finally it printed this big bearish big shadow. It broke through, and now the only thing in its way is really this 2170 level. So even if it brushes up against it and goes higher, that would probably mean a move to 1.2180. And that's currently 64 pips lower than where it is now. So if I were in a sell trade for the Euro Aussie, I would hold out for 1.2180. That's what I would do. If that were me, that's what I would do. Carlos says, what about the Aussie? My favorite pairs to trade. Absolutely. Whoa, this is brilliant. This is what, for those of you that have followed my trades, this is exactly what I was talking about yesterday. So here we are. Okay, let's just back it up here. here's my Aussie chart, and you'll notice that there's a gray box. Okay, first of all, what are all these dashed lines down here? These dashed lines are support and resistance levels. We had a kangaroo tail down here, which is marked with this arrow, and we have a kangaroo tail up here, in fact. But basically from July of 2012 all the way till today, we have seen the market stuck in this range between the 105.70 level and down here at the low at the 103.70 level. So it's about a 200 pip range, which is not a lot. Now you say, well, what about these breakouts? Well, we have had some breakouts. The market has broken out and it's jumped back in rather quickly. It broke out, jumped back in rather quickly. It broke out, jumped back in, came back down, bounced off the edges, broke down. Now this one was interesting because this looked like it was really going to go because it broke out, came back up, touched the edge of the box, kissed it, and then fell. But then guess what it did down here? Gave us another really beautiful looking daily kangaroo tail right here. So now guess what? Now we're back up in the box. Now you'll notice that in my box here I have a 104.70 level. What will usually happen when you have a box is you'll usually get somewhere in the middle of the box, you'll get a level of support and resistance. So not only do you have the upper level of resistance and the lower level of support when you have a box, but you generally have a middle level of support and resistance as well. And that is exactly where we see this market starting to turn away from. If it were me and I were trading this, Carlos, this is what I would do. I would wait for today's daily candle to close. If today's daily candle closes below yesterday's low, you can see on the chart yesterday's low was at 104.46. Right now it's 3 pips lower than that, but we have a long way to go on the daily candle. If the market closes at 104.43, or lower, then I would say I would be interested in a sell trade here. I would put my stop loss above yesterday's high right here. We'll make that red, in fact, just because. In fact, I'm going to send this out to my trading buddies as an alert. Because this is really... If it does what it looks like it's going to do, now again, we don't know what New York's going to do. New York may take us another way, totally another direction. But if it stays where it is right here, then I would be looking to sell this sucker, putting my stop loss up here, right around 105 basically. A stop loss at 105, and then I would target 103.70 down here. So that's roughly about 65 pips or so. Now, what happens when it breaks below and closes below 103.70? If it closes below 103.70, I'll hold out for 102.80 down here. That's another 90 pips. And if it can close below 102.80, then I'll hold out for down here at 101.80. Okay? So this is a really nice looking trade. I love it. I love the look at it. The look of it. And if you look at if you're a Fibonacci guy, and you pull a fib here, you might even notice that, no. I actually draw my fibs off the extreme lows and highs, but a lot of traders, they don't. They actually draw them off the candles. And if we look at it as far as, where did the market go, you can see that it's made up to the 78.6. Now, I'm not really one of those traders, but a lot of traders actually use that 78.6 level as a critical level of reversals, and they look for these reversals. And you probably, if you know what I'm talking about, you probably know about those. It's a whole geometric thing, but basically that's what I would do here. So Carlos, if I were you, I don't know if you're already in this, but if I were you and you were looking at this, I would wait for the daily candle to close. That's going to tell me, because this could turn around during New York and end up as a bullish or even a neutral candle. Obviously, right now it looks sweet, but we don't know what's going to happen over the next 11 hours or so. Abe Edward says, what about the loonie? Let's take a look. Okay, this is just a weird currency here. I like it. I like trading it, but it goes through phases of like doing really, really nice things, And then sometimes it just like down here it just consolidates. A lot of pairs do, but this pair has a tendency to consolidate or just go off to the races, and very little sort of in between. And what we have right now is what I would call a breakout. I would look for, well, ideally, the market would come back up and get really close to this 102 level and tag it over the next, say, three days. If it could get, it doesn't have to go all the way to 102, but maybe, up another 20 pips, 15 pips. If it could go up a little bit higher, and then I would look for it to fall down to $1.90 down here. So maybe a 4-hour chart would make more sense here. Let me show you what I'm talking about. See, basically we've seen the break. It's broken below this critical support level at 102, 102.10, around there. And now what we see is a sort of a weak retracement upwards. So I would look for this to peter out. Right around here would be great. And that is the 101.95. So right about where I was talking about, right around 102. If we could get up there and print a bearish candle on the 4-hour chart, that to me would be a brilliant sell. I hope that helps aid. Claudia says I'm short the euro yen. Do you want me to look at it, or are you happy with your short? I don't know if you want me to take a look, or if you just, or I don't really know. Claudio, yes, take a look. Okay, cool. Okay, cool. Let's see here. Euro yen. Here's the thing about the euro yen. Okay, we had support here, and it looks like we may have support here. See how this candle, let me zoom in so it's easier to see. But see how this candle snapped back up and closed higher? That's a sign of support, and then it's respecting the support down here. Obviously, back in the past, we've also had resistance and resistance right here. So it's an interesting spot where resistance, support. I don't know if it's going to break through or not, but at the moment, I wouldn't expect this pair to go much further than another 100 pips. See, it's at 120.97. It could get down to 119.97, but I don't think it's going to go, let's say, to 119.30 over the next day, or even 2 days. I wouldn't expect it to break through there just yet. I would expect it, if it's going to go lower, I would expect that to happen next week. And today, of course, is March 27th, 2013. So I wouldn't expect it to get lower today or tomorrow, but perhaps next week. And it may even actually go up and go higher. It's really kind of range bound, and I don't really know what to say about that chart, other than it's just recently tagged support. Sorry I can't give you more, but that's really all I see there. I try to trade what I see. Cable says, Colin, hey Colin, great to see you here. Well, this is what I was looking at yesterday on the cable. I basically had this box drawn here on the 4-hour cable chart, and I wanted, when the market broke through last week and went higher, I was waiting for it to get down to the cable, or to the box here, and to the edge of the box here, which is right around 1.50, 150, and then print a bullish candle. Well, you can see, I was actually hoping it would be this one that had the arrow. It did not. It did not bounce off this box because it closed inside the box. So for me, that invalidated any sort of buy trade that I could have taken here. This would have been a last kiss trade, right, folks? If you don't know what the last kiss trade is, I'm happy to send you the book. You just have to email me, walter@fxjake.com, and I will send you the book, okay? So this was a last kiss, potential last kiss. Didn't happen, didn't trigger, no trade was taken, no loss, nothing like that. But it looked like it was going to happen. And so at this stage, what I would say about this one is that we don't know. We just don't know what's going to happen here. It's looking fairly bearish, but for me, it really needs to break below 1.51. If it can close below 51, even better. if it can close below 1.5070. If we get a daily candle closing below 1.5070, then I think it's definitely going to fall 140 pips down to 49.20, 1.4920. But it has to have a daily close below 1.5070. Okay? I hope that helps, Colin. That's how I see this one. It obviously looks bearish. It's doing the bearish move, retracement, bearish move, retracement, bearish move, retracement sort of dance. So it may get there, but we don't know just yet. Short on the Aussie. Yep. Okay. Yep. So we talked about yours, right, Carlos? I think you're sorted. Which time frames are on the 3 support resistant lines colors? Well, normally, is there a chart that anyone would like to look at right now? We can just draw the support and resistance zones on the chart if you'd like. But normally what I do is I'll just draw a higher time frame, support and resistance levels, and then I'll go in and just... Abe, the email is walter@fxjake.com. I'm going to type it in here for you. Okay, there it is. Is there a chart that anyone would like to look at? Because I can actually just... That's awesome that you had your cell over there, Edward. Abe, that's awesome. Roberto also says to sell the CAD at 102. Interesting. Yeah, I mean, if you look at this, Colin, that's great. I'm glad that he's looking at the same thing. If you look at this, it looks like it's actually busted through. And so any sort of move right now, I would count as a retracement, really. And remember what we see here on the chart, the big candles are the bearish candles here, especially this most recent one. So even if we get a move up here, I would count it as a sort of a retracement move. So if the 4-hour candles give us a really nice bearish candle right around 102, to me that would be enough to take a sell on the CAD. Yep. I would prefer to trade it off the 4-hour charts. Euro pound. Okay. Okay. I don't think the correction's over in the pound. I'm just saying that it's the jury's out. Okay. There's some questions here on the pound. Let me just clarify what my thinking is. First of all, this was off of a 4-hour trade, so this number is no good. So what I really want to see here is a close below 50.70. So let me write that on here. A close below 57 on the daily chart, 50.70 on the daily chart, would be enough to get me interested in starting to think about a sell down to here, which would be about 140 pips, depending on, it depends on the entry price. But here's my email for those of you who want the Last Kiss book. So that's so what we're in right now is it's a move up. So the question is, here's the question. Here's the primary question with this pair. Is this downtrend intact, and this move up is just a retracement, and now it's going to fall through with some big bearish candles, or is this the beginning of an up move? If you look at the candles, it actually looks more like an up move than a retracement because of this big candle right here. So what we see here is this might be the beginning of an uptrend. So you see a thrust upward, then some consolidation, a thrust upward, then some consolidation. Now, if we get a daily candle that sags pretty low down here and closes below, say, this candle right here, why did I pick 1.5070? Because this low of this candle right here, and essentially the low of this candle and the low of this candle, that low is at 1.5070, or right around there, a little bit higher. So if we can get a big bearish candle here, that would suggest that, in fact, yes, the downtrend is going to continue. It needs to basically break this barrier right here, which is where all these candles couldn't close below. So if you think about it, all 4 candles here could not close below 1.5070. So if we get a candle that closes below where these candles couldn't, actually all 5 candles couldn't, then I would say, all right, now we're back off to the races with our downtrend. And at the very least, we'd come down here and double bottom. So that's my thinking on the pound. I know there's a lot of questions about that. I hope that helps. I don't think there's strong resistance at 1575. I just think that's the important spot to tell, what's going on here. Let's look at the yen because I know Aid wants to look at it. We'll look at the yen, the pound yen, and then we will look at the Swissy, and then we'll finally draw some zones on our euro pound. Okay? So we'll look at the yen. Okay. Let's just get rid of all of these numbers and all this stuff. Just totally in the way. Okay. Yen. Right. All right. Remember we were talking about that drop trade on the other pair, on the euro CAD? This is kind of what we have going on the yen. If the yen could close below this trend line, which is essentially, over the next 2 days, if it can close below 94, that would be a pretty good sign that it's going to fall down here to 92.30. So if it can close below 94, it's good for 170 pips. But if it can't, then it's probably going to bounce and go higher. Now, someone was looking at the 4-hour chart. Who was that? It was Claudio. Claudio was looking at the 4-hour yen. Okay, let's take a look. Looks very choppy. Yeah, I agree. It is very choppy. It looks very choppy. There isn't a lot to say about whether, the only thing I would say is if price action can give us a break, a close below this trend line, then I would say it's going to be it's bearish. Because notice that this trend line also coincides with these horizontal highs over here. So it's a really critical area we're at. If we can close below it, that's a good sign that we're going to see a fall down to the next level. If we can't close below it, then we're probably going to bounce up and at least make a, some sort of top up here, and maybe we'll fall off 96.20. But if we get a close below 94, that would be a really good sign for the bears essentially. Let's look at the pound yen because that was another request here. I think I must have had a 4-hour chart on here because I have all these arrows that are. There's a kangaroo tail right there on the pound yen. Okay, so this is what I would say about the pound yen. It's in a box. I would say it's in a box. I'm on the 4-hour here just because it's easier. And if you look at your box here, you probably... Whoa, that looks wild with the red. I'm going to change the color here, folks, just so we can see it better. We'll go with the light sea green. So in the box here, you'll notice that we have... Remember I was talking about the midpoint idea? We probably have a midpoint right around here. Let's just see what the line chart shows us. Yeah, you can see it showing up here. There's a touch there, there's one there, there's one there, and then we just had recently one right there. So until the market breaks out of this box, which has a high up here around 145 and a low down here around 142.30, I'm not really interested in trading this pair. It certainly looks like it's going to go back down to the bottom edge of the box, but we don't know that yet. And if I had to guess, I would say it's much more likely in the next day to go to 142.48 before it gets to 144.05, right? If I had to guess, I would say, given this bearish move here, it's probably going to go down to 142.48 before it goes to 144. But, that's only 30 pips away, so 30, 40 pips away. Swissy. We forgot the Swissy. Sorry about that, Bill. Here's the Swissy. So this is a really ugly chart to me. I don't really like this one. You can see we had a kangaroo tail back down here. It hit both targets. I don't really like this chart at all. So when I see a chart that's this is, to me, a huge mess. This is just a pile right here. This is what I call a pile. It's all piled up. So what I would do is I would go to the 4-hour and see if I can make any sense of this. And if I were in the 4-hour time frame, I would look like this and do something like that, draw my box in here, and say that we're at the edge of the box. Where might my middle of the box be? It looks like it's going to be right around this area right here. It's not always the precise middle, it's just generally around the midpoint of the box. So we could get a breakout here. If the Swissy breaks out higher, I would look for it to come back down, kiss the edge of the box, and print a bullish candle that does not close below 95.30. So I need to see, first of all, it needs to break out, come higher. Then probably next week it'll come back down. And if I have a candle that does not close below 95.30, then I'm okay with taking a buy on this one. So this would be a last kiss setup on the 4-hour chart. That's what I see on the Swissy. For the pound, euro, pound. Okay, euro, pound. Let's do the euro, pound. And what we'll do is we will draw the chart on the euro, pound, just as if it's a new chart. You know what I mean? So that those of you that are new here and haven't been to the Naked Forex webinar, that way you see how these zones come about. So I will do the daily chart. So because I'm on the daily chart, I'm going to go ahead and do the weekly, and I'm going to draw my support and resistance levels based on the weekly chart. So I go to the extreme highs and the extreme lows, and then I fill in everything in between. That's basically how it works. And what I'm looking for here are those places where the market's touched it several times. 1, 2, 3, 4, 5. These are the places that I want to trade off of because the market's repeatedly reversed there. So I would expect when the market gets back there, it's likely to reverse once again. But that's really what I'm doing here is I'm trading off of these reversal spots where the market's historically turned around over and over again. There's one right here, and then one right here. And what I'm going to do next, just go back and make sure that I didn't miss any. Obviously, there's going to be some in here, but we're not down there right now, so it's not that critical that I have them drawn in. But if we do get here, I'll obviously go back on my chart, make sure that all of these levels are there for when the market gets there. Okay, whoops. This is a really nice one with all these touches here. Look at that. That's beautiful. Even this one, you look at the line chart and you say, oh, well, it didn't quite get there. My guess is that there's going to be a wick here. I don't know. My guess is there's going to be a wick here, and that wick's going to touch 65.90. Let's see. No. It went as low as 66.07, so it missed it by 17 pips. Came awfully. 17 pips on a daily chart, though. That's good enough for me. Okay, so now I'm on the daily. Let's go to the daily here. And now what I'm going to do is go to my line chart once again, back it up, and just make sure that there aren't any glaring omissions, such as this one right here. See how this one shows up? That to me was a glaring omission, this level right here. So normally I'll trade off the weekly levels if I'm on the daily chart. If I'm on the 4-hour chart, I'll likely trade off the daily levels. If I'm on the 1-hour chart, I'm going to trade off the 4-hour levels. But I obviously have to make sure that there aren't any missing zones here. Like here's another one. I probably want to capture this one right here because I see one there, one there, one there, one there, a little touch on the way up there. So I think I have most of them that are important. Perhaps one right here. Now if I go back, I'm probably going to see that this 93.47 level also turns up in the past. Let's see. Yeah, right there. It broke through, came back down, touched it, and went up. So that's how the market has a memory. That's my theory anyway. All right. So based on the euro pound chart, we're essentially in no man's land, and I'm waiting for the market to get down to here, which is 84, or if it decides to come back up, a spot to sell could be right here around 85.45.
So this is in between support and resistance. That's where the market is on the euro pound. So hopefully that makes sense, 8. Mark says, do you trade daily and 4-hour only? No, but those are just my favorite ones because you don't have to sit around and watch the... Good question, Mark. Basically, I don't like to sit around and watch the charts, so I like to trade 4-hour and daily charts. And weekly. I will trade 1-hour charts. I just, it's just not my favorite. Ahmed says, Walter, could the euro-US dollar fall be a... I think you mean fake breakout, right? A fake breakout on the euro. Let's see. Nope. It looks like a real breakout to me. We don't really know, Ahmed, but I would, if I had to guess, if someone, held a water balloon to my head and said, where's the euro going to go? I would say it's going to touch 1.27 even, or let's just say 127.10 to be safe, which is a fall of 80 pips. And I would say it's much more likely to go down 80 pips from where it is right now than it is to go up 130 pips and hit 1.2930. Okay? It's much more likely to hit 27.10 than to go to 29.30. And the reason I say that is because it's sort of like the euro pound. We're in no man's land. We're between these two levels. But because it looks so bearish, we had a bearish big shadow right here, this big red candle. Then we held there for a day, and then we fell. This move, by the way, let me zoom in. This little pattern here with this big bearish candle and this little candle, this reminds me of the Canadian dollar. Let me show you again. Big candle, big bearish candle, little retracement candle, and then another move down. That's kind of what I'm looking at on the CAD on the daily. Let me show you. So here's our big candle down, and then today it's sort of that little retracement move up. Do you see what I'm saying? Do you see that parallel there? I would look for something like that on the CAD. Now, what might be a reason for me to, let's say, invalidate that? Well, if today had a huge bullish candle and it closed up near 102, if it did that, if we had a big blue candle and closed at 102, right on 102 or higher, I would say, okay, that's no good. But that's the only thing that would do that for me. So Ahmed, I would say that the euro-US dollar fall is probably not a fake breakout. Claudio says, would you buy dollar strength on a retracement? In other words, sell euro, yen, etc. for a 3 to 5 days trade? No, I wouldn't sell the euro yen right now. I think we did talk a little bit about this. I would basically wait and see if the market is going to bounce here at 120, basically. I want to know what it's going to do when it gets down to 120 even. Is it going to bounce? Is it going to show a wick here or a bullish candle, or is it going to break through and close lower? Let's say today's candle closed at 119.60. Well, then okay, yeah, it's probably going to fall to 117.60. But if it shows a wick like it did here a couple days ago, then maybe it's going to move back up, or at least consolidate before it finally breaks through. So I probably would not do that, Claudio. Gregorian, average pips per month. I don't like to think of it in terms of average pips. We should have a webinar on money management because, Gregorian, what I want to do is talk about how counting pips can be misleading. So it's much better to look at trades in terms of how well did they do relative to risk. And so we can talk about that at a webinar. I hope you don't think I'm evading the question, but I think, in other words, if you take a weekly chart trade and you risk 350 pips and you make 100 pips on that, well, that's okay, but you're only making 30 cents for every, less than 30 cents, in fact, for every dollar that was at risk. So, it's important to look at trades in sort of that point of view, I guess. I hope that makes sense, Gregorian. Um, do you draw different colors for different time frames? I Boyke, I used to be really good at that and make sure that, well, like for example, here's the New Zealand Singapore, and what I used to do is I draw the weekly time frame zones in green, for example, and the daily ones in red or something like that. But they tend to be all the same color now. I'm probably not as religious about that as I used to be. So it's not that critical. It's just the question I have is there a zone in this area? It's not as. I guess if pushed, I would say I prefer to trade at a higher time frame zone. But if there's a daily zone on a daily chart and it's not, and I didn't identify it on the weekly chart, I'll still take the trade, right? Please say something about the daily trader. I don't know what to say about the daily trader, Rashida. I don't know. Yesterday, Pan says, yesterday Ed Ponce was talking about Aussie strength. So would this affect your bias? Look, I'm not saying okay, let me be really clear on this one. I'm not saying I'm going to sell the Aussie dollar. I am saying this though. If this were the daily candle and it closed right where it is right now, I would sell the Aussie dollar. All right? I just want to be really, really clear on that. So, given that we have approximately, I don't know, I think it's 10 hours and 15 minutes before my daily candle closes, then I would say, I don't know what this candle is going to look like. If this candle turns around and ends up being a blue candle or even a small red candle with a close, let's say that this candle closes at 104.61, then I would not sell the Aussie dollar. To me, it's important that this line chart looks like this. Does everyone see that? See how the line chart's bent right here? That's what I'm looking for here. I'm looking for a sharp bend that's going to suggest, what do we see when the market makes these sharp bends? Here's one right here, it fell. Here's one right here, it fell. Here's another one right here, it fell. Here's another one right here, it fell. Here's another one, it fell, right? I'm not looking for a weak bend like this one right here, okay? I'm looking for a sharp bend, and I'm looking for it on a spot where the market has reversed. It reversed here, it reversed there, it held there, it held there, it held there, reversed slightly, it reversed there, it reversed there, it held there, and it reversed there. So this is why I'm hanging my hat on this level, because the market tends to turn around here. But the only thing that will tell me that it's likely to turn around over the next 3 to 5 days is if we get a big bearish candle, and that will therefore make this line a very sharp, downward sloping line. Anything else, a higher close than, really, it should really close below yesterday's low. And yesterday's low on my chart is 104.46. Right now, it's at 104.38, and it's been as low as 104.30. So it's looking good. But again, we still have 10 plus hours to go. Who knows what's going to happen in New York? This may totally revert, go up. And if that happens, maybe we'll look for a buy and buy it up and buy it up at target 105.70. Who knows? All I'm saying is that based on what we see right here, I'm bearish. That's all. That's the only thing I'm saying about this. So I'm not, I don't want to. I have no problem going against other traders. It happens all the time. In fact, one of my favorite trading systems is to find out when most traders are doing one thing and then I do the opposite. And those of you in the Daily Trader know about that. But basically, my point is that this daily candle has some ways to go before we know what it's going to tell us. If it closes like this, it's telling us the market's going to go down. If it closes, with an upward move at the end of the day here, then it's undecided. So I hope that makes sense. Yeah. Okay, cool. No worries, Pam. I'm glad you asked the question. That's great. Gregorian, yeah, sure. In fact, email me, Gregorian.
And we can do something like that. I can actually send you a place where you can do that. A great place to do that. Are there any other charts? I think we have a few more minutes here. So hopefully we got a few things accomplished here. We know why I'm going to... wow, this is really cool. Why I have the... Oh, we wanted to talk about how I draw the trend lines. Let's do that. I tend to draw... Let's find a chart here. I'm just going to pick anything. Mexican peso. Okay. Here's the Mexican peso. I'm going to go to the 4-hour, and I'm going to put on... Because there was a question here about drawing trend lines. So here we are on the Mexican peso, and I want to draw a trend line. Okay, so this is how I would draw a trend line on the Mexican peso. Like this. And what I would say is, it looks like... this is the 4-hour US dollar Mexican peso, and this is how I draw the trend line here. I have a touch, I have another touch, and now, especially today, if we get a bullish candle, we have a breakout. Okay, so the question would be, well, where is the market going to go? Well, it's probably going to go up into this area up here. It'll probably go over here, right around there. So that is how I draw the trend line. So you can see, I know there's a big fight about, how many touches, whether you draw the wicks or the bodies or what, all that stuff. What I try and do is make it fit all of the bounces. So I would draw another one right here, something like that. I guess I tend to hug the bodies more than the wicks. But sometimes the touch will be a wick touch, So I would draw this one something like, probably something like this. Yeah. Notice how it bounced, hit it, broke through, came back up, touched it, fell, came back up, touched it again, and then finally fell. Where did it fall over here? It fell to our spot over here where it bottomed out there, and it came back right there. Magic, isn't it? The market remembered that on February 5th it touched here, and remembered that on February 19th. So on the Mexican peso, this is just an example of how I would draw a trend line, and I would say, boom, boom, boom. We're looking like we have a breakout. If today's a bullish candle, it looks like a breakout from this 4-hour trend line, and it's probably going to go up. There are several targets we could look at here. One really nice one would be this high up here. You have to first hurdle over these highs, though, right here. Boom, boom, boom. And that's around 12.4650. But 12.5350 is the target as well. So there you go. That's a really interesting setup there. But it also just shows you how I draw the trend lines. Ahmed says, Walter, in your experience, does the New York session follow London session? No, it doesn't necessarily. It sometimes will, but it will often pause or reverse. The way I look at it is you get these bridges. I expect the Asian session to go in the wrong direction, and I expect London to go in the opposite of Asia. And then when New York comes in, it could go either way. New York could actually follow London, or it might reverse it. New York can also follow London and then at lunchtime start to reverse it and retrace a bit. So, there's lots of different ways. But the only one that I would say for sure that I like is Asian go up, then that means London goes down. Asian go down, that means London's probably going to go up. Most of the time. And if you don't believe me, let's just pull up a Euro chart. Let's go to the 1-hour chart. Now let's see on the Asian session. Here's a good example. Asia goes up, London and New York go down. Asia goes up, London goes down, New York goes up, and not really much going on here. Asia goes down slightly, then up a little bit. Really, Asia didn't go far. Asia pretty much stayed where it opened. It opened right here, and so far London's going down. So I generally expect Asia to go in the wrong direction. Almost always. It will drift around, or if it makes a strong move, it will often be reversed. It will often be reversed by London. Did we do New Zealand? Nope, that would be the last one. Let's do the Kiwi. Last one here, folks, before we shut her down. The Kiwi is... Where the heck is it? There it is. Very similar to the Aussie. The Kiwi is coming back up to 83.90, but it's not as weak. The Aussie actually has a more bearish candle here. It's actually come down lower than the Kiwi, so it's very similar, but we're on support here at the edge of this box. So to me, the Kiwi would have to close below 83.40. If the Kiwi could close below 83.40, then I'd look at selling it perhaps tomorrow. And where would my target be? Well, the obvious target is going to be right off these highs right here. There's a bounce here, a bounce there, a bounce there, and a bounce there, and that would be at 82.80. That would be a nice target for that one. But again, today we need to see it first close below this line. It needs to close below 83.40. Then I could sell it tomorrow and target 82.80. About Asia, that's what I call the Asian drift. We might have to do a whole webinar on that. That might be what we do. We'll do a webinar on the Asian drift. Thanks a lot for your time, guys. Carlos, yeah, this looks really good. If the Aussie dollar can close below yesterday's low, I would be looking at selling this pair for sure. Thanks a lot, everybody. I really appreciate it. I hope you have a wonderful week, and we'll see you next week. I think it's next Monday. Take care, Han. Thanks for showing up. See you, Pan. Thanks a lot, Mark. Bye, Ahmed. See you, Bill. Take care, everyone. Have a great, great day. Bye.